Hello everyone, my name is Ashutosh Bishnoi and I am Managing Director of Mahindra Manulife Mutual Fund. What we are here to speak about today is a very interesting new investment opportunity that we are bringing to the Indian market with the help of our partner Manulife Asia. And this particular opportunity happens to be in an asset class which we as Indians absolutely love, and that is real estate. How does it work? So Manulife in Asia Pacific has a mutual fund called Manulife Asia Pacific REITs Fund. REITs is nothing but Real Estate Investment Trust. It is exactly like a mutual fund by itself, but listed. So in a REIT, properties are purchased and held for long periods of time. And essentially, investing in a REIT is like investing in a pre-rented property. So a REIT is regulated by regulators, in this particular case, by the Monetary Authority of Singapore, and on top of which it will be regulated by SEBI in India. And it makes sure that almost all the cash flow that the REIT receives by way of rental incomes, or if the property prices appreciate and the REIT sells off a property, then the capital gains, all of that is flowed back into the hands of the investors, a minimum of 90% of the cash flow. So that's how a REIT is structured. The only difference between a REIT and a mutual fund is that REITs have to be listed on stock exchanges so that as investors, we can sell them off and exit the REIT. Now, REITs have begun to come in India as well, but really very new. There are only 3 listed REITs in India and only 1 year old. Whereas in Asia Pacific, REITs have been around for more than 20 years, I think nearly 25 years now. And listed REITs market capitalization, which is the total value of these REITs, which are listed across Asia Pacific, is in excess of $300 billion. That's a really large market, very liquid, very easy to get in and out. So Manulife set up a fund about 3 years ago. It's called the Manulife Asia Pacific REITs Fund. This fund picks approximately 60 to 65 holdings. At current point in time, it has 45 holdings of different types of REITs. All are listed, and about 60% of the REITs that this fund invests in are in Singapore. Why Singapore? Because Singapore is essentially one of the largest markets of REITs anywhere outside the US. Hundreds of REITs are listed across Asia Pacific, out of which the real estate analysts and the real estate fund managers of Manulife identify which ones look good. So let me give you an example what that process is like. You would have heard about people, investment managers analyzing equities, which stock is better, how it will do well, etc. Similarly, fund managers whose expertise is REITs analyze the REITs. So in the last couple of years, through the pandemic, the Manulife Asia Pacific REIT fund manager identified and tremendously benefited from investing in data center REITs, logistics REITs, hospital REITs. Why? Because these were exactly the sectors where the demand for real estate shot up across Asia Pacific because of the pandemic, and went light on its investment in office REITs or retail mall REITs or hospitality, hotel REITs. So the fund manager therefore identifies what will do well and takes a position there. In addition to REITs, this particular fund may also put some of its money in the property stocks across Asia Pacific. At this point in time, of course, that investment is very low. We all know that the property market, the equity market of properties, in Asia Pacific over the last few months has been cooling off. So, what is the fund manager doing? Moving away from that and moving into those REITs which will benefit tremendously as the Asia Pacific opens up. So Singapore, Hong Kong, and many other countries in the world, in Asia Pacific particularly, Malaysia, Philippines, uh, Taiwan, these are all countries where this fund is invested. And Singapore and Hong Kong particularly are opening very fast. So which REITs are going to benefit, you think? Retail, which is malls and offices, naturally, and of course, industrial. So clearly, the focus has begun to shift already. So this is how the REITs investment takes place. As an investor, how should you look at it? I should say, position the REITs somewhere in between equities and debt. Why? Because in a REIT, what is a stable cash flow coming in all the time is from the rents. Now, in Asia Pacific, that number is pretty large. In India, for example, real estate rents tend to be between 2 and 3% annual rent of a value of a property. But this particular fund of ours enjoys as much as 5% rental value. So there is a 5% coming in regularly as a cash flow, on top of which you may get an opportunity to make money out of capital gains of the properties that are being held in the REIT, plus if you invest in any property company equities. So for example, this particular fund, if you take June data, since inception return of this fund as of June 30th of 2021 was in excess of 12% annually. Now, if you look at that number, well, clearly it's not like equities, but it is far better than fixed income, isn't it? And at this point in time, if you're wondering, and a lot of people ask me this question, that do you think the equity markets are stretched? Now, personally, I am a diehard optimist. I believe equities will do well always. But if you're nervous and you think, you may want to pair your position from equities and debt, at this point in time doesn't look very interesting from an interest rate point of view, then this is a good time to be entering an Asia Pacific REITs fund, because this is going to benefit from the opening up of the economies. And like I gave you a sense of the kind of investment, but there is an additional interesting investment opportunity or an income opportunity in a fund of fund, because that's what it is. You give us money, we take that money and invest in the dollar NAV of the Singapore fund. Data is very clear that over last 50 years, rupee versus dollar equation continues to deteriorate at the rate of approximately 4% per annum. Now, that 4% doesn't come in every year. In fact, in the last 2 years, it's only been about 2.5–3%. And therefore, it is overdue to correct, which means you send your money out as rupee, it is held in dollars, dollar appreciates against the rupee, and you get that additional benefit when you take it out. So what you get from the income of the REIT, what you get from capital gains, and what you get from the rupee dollar adds up to a very nice total. Of course, like I said, not as good as equities could be, but certainly better than fixed income. So how is this taxed? Taxation of all REITs anywhere in the world is generally not like equities. My advice to you would be, look for the growth plan. Because if you take the dividend plan, then we know that dividend is going to be taxable in your hands. There is no distribution tax on dividend. However, you will have to pay dividend tax based on your total income of the year. My advice would be, go for the cumulative option. Because in the cumulative option, you get the benefit of indexation. And whatever the value of index value of your investment, on top of that, you only pay 20% capital gains. So it ends up being a very small fractional tax. This is how this particular fund is going to be taxed. So let me invite you to join us in the NFO of this fund. It is going to be opening for subscription from 28th of September and will continue to be on offer till October 12, 2021. So take participation with a small amount of money in the large and flourishing growth real estate market of Asia Pacific. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.